Hi, my name is Justin Cass, and I'm the CIO and co-head of the Income and Growth team for Allianz Global Investors. Today, we are here to give a brief update on what we're seeing in the markets. So 2022 has been a challenging start to the year. If we look at the broad markets, the S&P is down close to 20%. The high yield market is down over 10%. The investment grade corporate index is also down over 10%. And the convertible market is down over 15%. So needless to say, all assets, even those asset classes that are supposed to be defensive, have moved lower. There's a lot of reasons why people are citing for this. It could be slowing economic growth, it could be inflation, supply chain issues, COVID policies globally, war, a more hawkish Fed. So there's a lot of reasons that investors are citing for why the markets have done what they've done so far in 2022. We're beginning to see those broad impacts start to impact individual companies. If we just look at the headlines over the past couple of weeks, you've seen companies discuss supply chain issues, global uncertainty causing certain companies to pause spend. In addition, you're seeing many big companies talk about monitoring capital expenditures, putting in hiring freeze. So all of these issues that we've seen globally are starting to impact the individual companies. When we look forward, there's still a tremendous amount of uncertainty. We don't know what the path of interest rates are. We don't know how quickly inflation will come down. We don't know the impact of war or COVID disruptions and what it's going to mean to the companies or how long that is going to last. But anytime we see uncertainty in the market and we see a sell-off, that's also presented itself with many opportunities. In fact, when we look at the high yield market, I just mentioned that it's down over 10%. We're now seeing yields in the high yield market back up in range with the historical norms at 8%. Typically, when we see forward returns in the 8% range or the yield range, historically, that's been a good time for investors to start looking at the asset class for possible opportunities going forward. Likewise, when you look at the investment grade universe, it's down over 10% like I mentioned. And the only other time where we've had negative returns like this was in the global financial crisis, and the investment grade index at that time fell just less than 7%. So it's really historic what we're seeing in these markets. And again, the investment grade markets today are yielding roughly 5%. And when you look at the forward return opportunity for that, that's a very encouraging sign. So despite market uncertainty, we are seeing asset classes that offer positive or potential positive forward returns. And we certainly believe it's a good time to be looking at these asset classes. The one other thing we had mentioned as far as opportunity sets we're seeing in the market is with this increased volatility that we're seeing is covered call writing. So anytime you're in a straight up market, covered call writing isn't necessarily accretive to a portfolio. But when you enter in periods of volatility or a down market, covered call premium is a great way to enhance income in the portfolio. So again, it is very difficult to assess whether we're at a bottom in the market because there are a lot of uncertainties. But when we look at certain asset classes such as high yield bonds, investment grade bonds, and even select aspects of the convertible bonds, we're very encouraged by what we see today. And we think that the back half of the year should be or could be potentially better than what we're seeing or what we saw in the first half of 2022.
Allianz Global Investors.